Okay guys, we're going to visit the Answers Hub, see if there's anything in there and answer the question. Let's roll the intro. Okay boys and girls, let me get a quick cup of coffee, because we all know Scruffy likes a coffee. And let's see what this Answers Hub's all about, shall we? Well, if you haven't been here before, this is part of the Scruffy Squad. It's a Discord channel that we run. I'm in this every day. We do live face-to-face every working day as well. And what you'll find with that is it's this sort of thing down here, market call. So we go to market, a bunch of us get together, and it's every single day, and we go through the charts live. We talk mindset, you name it, whatever. And the replays are there for the plus members. If you're Scruffy, Rogue rather, you're very welcome to come along and see it. Anyway, touch on what the Scruffy Squad is and you'll find that. Now, also part of it, because it's a big community, we have what's called the Answers Hub. Now, the Answers Hub is exactly what it says it is. So if you've got a basic question, drop it in here. Some of them are public. A lot of them are kept behind closed doors just for the squad. But if it's a generic question, I'll just put it public. And today we're up to Ant's question. So it's a little salute to you, my kid. And it's about, where do you take your profit target? Now, he's gone into it to currently take a 52 period weekly ATR divided by 3, use for swing target, divide by 3, etc., as you can see in the question. And it works very well, but he's opened everybody's method. Right, this is, it's quite a decisive question, because there's no right or wrong answer to it. Now, personally, you can work on monetary targets. Case in point, let me show you something. If I pull in this, I've had an absolute amazing month this month on the small BlackBull account. It's mainly down to a couple of good runs on Bitcoin and gold. I've let the trades run because it was part of my plan to split and run. Harvest the money out. I've actually got 1,200 wages out of this now from May, so I don't care what happens to this account. I'm actually going to cash it out and take Juan on a nice holiday. But what I'm driving at from a target point of view is it actually has a monetary target, which is 568 if I'm just looking at a baseline of what I want. So you can look at a monetary target. Now, one of the things with this is when you've got an account that is very small, it works very well because you can't afford to lose your balance. If it goes wrong, it hurts. So you've got to get in, get out quick. And if you only want a fiver and you've got a fiver, fine. Reset, do it again the next day. Now, the next kind of target is, which is the traditional way and probably the better of the way forward, and that's move from a zone to a zone and then have your other targets in it. So for argument's sake, we're looking at this. What do these levels represent? Well, each one of these levels represents an area of value. Now, you're either going to see that it's cheap or you're going to see that it's expensive. Case in point, somebody might have seen that it was cheap here, so they buy it, and then it moves naturally to the next level, which would be deemed expensive, and they sell it. Now, that could be your profit target. In other words, you're moving from one area to the next, because that's how the markets operate. They work from a zone to a zone. Well, do you really want to give all of that profit away? No. So you take your money, decide whether this is value again. If you believe so, buy it to the next level. And if you think it's exhausted, you now sell it back. So that's another way of doing a target. Now, you can also set minimum targets. Now, if you're setting a minimum target, that is divide a daily ATR by 3. That'll give you roughly the wave. This is a wave. And then divide that by 3. And that'll give you a safe target. What will that do for you? Well, it's very difficult to catch the bottom third. And it's very difficult to time the top third, tops and bottoms. You want the bit in the middle. So you divide it by 3 and then divide it by 3 again. So that'll give you a pip count. And then you just target that pip count. So they're the different methods to use. Personally, I use a combination of all of it. I have a monetary target in mind when I'm looking at my wages. It's £200 a day. Anything above that is a bonus, but that's roughly where I'm aiming to. Why? Well, I like to trade 3 days a week. Tuesday, Wednesday, Thursday are my trading days. That's 600 quid a week. I work it out over 48 weeks of the year. Why? Because I know I'm going to be wrong and I want some time off. And that equals about 30,000. 30,000 in profits per year is my baseline salary. Anything I do above that is bonus. So I have a wage account that pulls in roughly about that amount. And then I have other accounts that I use as investment. And you see that in the Vanguard. And any surplus that I've had gets dropped into that Vanguard. And that Vanguard now becomes my trading account, and it's touching nearly 90,000 at this moment in time. And you see that in the updates. So I hope that kind of gives you a little bit of an insight. I just wanted to do quick. It's a big subject, but from a targeting point of view, you kind of do what's comfortable for you. Now, if you want to go for 10 pips and be happy with 10 pips, that's fine. But if you want a monetary value to that as well, so for argument's sake, you want £100 a day and you're only looking for 10 pips, that means your position size needs to be 10 quid. And it's as simple as that. So you break it down logically and look to trade once, twice a day. Work out what your monetary amount is. From the monetary amount, you can work out what your pip count is based on your account size. And if they all marry up, brilliant. If they don't, then you've got to build your account up to a point where it will take the target that you've got in mind. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.